Well, good morning, everybody, and welcome to Friday, November. Welcome to November. This is Andrew Horowitz. I'm the co-founder of TriggerCharts. Hopefully, everybody can see what's going on the screen, can hear me well, and we have a lot to talk about today. Sorry about not being here last week, but unfortunately, just couldn't be helped. But we are going to cover a lot of things today. We're going to cover areas related to basic technicals today, a little bit different than what we usually do, because I want to kind of focus in on how to use multiple indicators for confirmation, as well as looking at a couple of things I think you'll find pretty interesting with regard to overbought and oversold indicators. Just a note, and I think it's really important to remember, this is for educational purposes only. It's not an offer to buy or sell any security. It is not a recommendation of any kind, of any sort whatsoever. Again, used for educational purposes only. Before we start, I want to launch a quick poll here. Just a quick question. Just let me know what you're thinking here. Should be coming up on your screen right now. Just vote on that, because I want to kind of get a little feel from the audience, which looks like it's growing again. So I guess a lot of people are enjoying this. And by the way, if you don't get to see this right now, or you're hearing me sometime and you're like, well, where can I hear it if I'm not live? You can, of course, go to our site, www.triggercharts.com, or the YouTube channel that we have all of the videos for the past webinars that will be up within a couple of hours after the actual webinar on Friday mornings. So here we are. We got about a couple more seconds left for this. We'll get everybody in here and we'll see what people voted. A couple more people need to vote, and then we'll go from there. All right. Well, let's talk about, well, let's finish up the poll. Let's close it down. Ready? Closing the poll down in 2 seconds, 1 second, and it's closed. We got about 95% of the people there. So what do we have? We about 71% of the people have said that it is overvalued. About 29% say just about right, and everybody else, or the last thing, undervalued, 0. A big fat 0 for the undervalued. So most people, it seems, at least in this room, in this little poll that we did here, believe that markets are somewhere between just about right to possibly overvalued. And we're going to get into that today. We're going to talk a little bit about Bollinger Bands. We're going to talk about RSI, combine that with some of the indicators that we have also. I'll mention this to you before we go any further. Any of the particular indicators that we're showing you here, except for the Bollinger Bands and RSI, those are free. Those are part of, we're getting some alerts here. I'm going to move my alerts over here. Any of the indicators that we have that are available from the TriggerCharts are, of course, on the TradeStation Trading App Store, and you have Bollinger Bands and RSI built in. You just go to your studies and add that. I'll show you how to do that afterwards. Let's talk about what's going on in the world, and let's really focus in on where we are with regard to economics right now. Before we do that, let's go here. Let's close this down, give us some more space to run with. All right, here we go. So we do have a mixed manufacturing or mixed economic situation going on right now. We see that manufacturing is still in recession. Clearly, the recent ISM manufacturing number came in contraction territory once again, 48 print or so on that. A little bit better than last month, but yet at the same time, we are seeing it in contraction. ISM services, which is about 70% of the overall economic powerhouse of the U.S., came in a little bit better, actually, at 54, better than last month as well. So we're still seeing that there is this bifurcation, this real concern about, hey, manufacturing is in a recession. There's no question about that. And then we have services, which, again, 70% of our economy is service related, so that's good, is still in growth. That's good. Earnings, about 73% of the S&P 500 beat estimates. That's right on with about long-term averages, give or take. We've seen also that a good number, I think it's about 65%, met or beat revenue estimates. Again, within long-term averages, that's good. The size of the beats, some a little bit better. Remember something. It's really important to remember that analysts really dropped the estimates into the earnings. So when they dropped estimates into earnings, what ended up happening was, of course, it created a low bar for companies to then go ahead and beat. So what we're seeing right now is the after effect of that is a bit of a, I guess, a sigh of relief where, you know what, well, what happens if it's even worse? Well, you know what, we're going to stay away. And what we're finding is that a lot of companies were able to maintain at least where analysts thought they were going to be and produce a better EPS output. A lot of reasons for that. Bottom line, it creates a really good market situation. Markets, of course, are in hope mode, hope that things will get better. Once, in fact, we get rid of this whole trade war, trade kerfuffle, trade skirmish. There's going to be a better time ahead. And that will, of course, help earnings. That will, of course, help markets. So all this stuff is embedded right now in the markets. Well, we didn't even mention the other thing that really helped markets a lot. Last week, the Fed, in fact, did cut rates by 25 basis points again. And that helped markets initially move up. Next day, people were like, well, you know what? They did move rates up, but, they also said that they're not going to be moving rates much, to move rates down, but they also said they're not going to be moving rates much more moving forward. Well, that's a big concern. Markets love a stimulative Fed. They love lower rates. They love quantitative easing. And the fact that the Fed said they're on hold for a while, or at least the undertone of what they said was they're on hold. And markets are going to have to deal with that because we're going to have to see what happens with economic numbers, what happens with the trade war. All these things are going to be amplified now because it's also going to be a read-through of what the Fed is going to do. Are we going to see if there's bad news that turns out to be good news because the Fed will actually help? And if we see good news, is that going to be bad news because the Fed is going to stop and stay pat? That's a big issue. We're seeing a lot of trade deal noise come through, even yesterday. If you haven't noticed, on one hand, we see China saying, yeah, hey, you know what? We have a mutual agreement that we're going to start reducing the tariffs, taking some tariffs off in phases. And then the U.S., well, we think we're going to do that. Then later in the day, we see there's a bit of controversy in the White House about, oh, I don't think we're going to want to do this. So whatever you may think about that and whatever you think about the trade war, realize this is all done for optics. But what it's doing is it's creating a significant amount of concern on one hand, hope and jubilation on the other hand, and it's creating a little bit of, I would say, confusion in the markets. One of the things that we're seeing is a lot of sentiment indicators are getting near peaks. And this is why I asked the question earlier about, are markets overvalued, undervalued? What do you think about that? And why, in fact, we're going to talk about Bollinger Bands and RSI. Not so much that we have just an absolute belief in utilizing either of those, but what I can tell you is there's a lot of big traders and institutions that use these. And we have to know the tools that institutions are using, aside from just looking at the ones that we use as a core, just to see what are they peaking at also and what is that telling us. One of the things that we looked at was, let me pull this up. This is a fear and greed index. This is done by CNN. You can grab this anytime you want. It takes about, I think, 7 different drivers. I think it's 7 or 8. I'm not sure the number. There's a lot of different inputs into this. It's put call ratios. It's pricing momentum on the markets. It's a whole host of psychological and technical indicators that they put together and they come up with where it is fear, where people are really fearful of investing, usually at market bottoms, and that's where you want to seem to get out. If the actual gauge was over here at a negative, or excuse me, at a point, +1, +5, +10, this is an area that you would say, well, there's a lot of fear in the street and maybe it's getting overdone, oversold. We could look at that as oversold or overbought. On the right-hand side here, you'll notice it says we're in extreme greed, 91. I'm not sure where it is today. I did this last night, but this has ticked up substantially over the last few days. During the middle of the week, it was an 88. Now it's a 91, showing extreme greed. You can see historically, the last time this was back in 2017. And what happens usually from there is that markets start to, say, maybe we've ramped up vertically too much. And maybe there's not enough concern and there's complacency currently in the markets. And this will cause maybe not a correction, but it may cause things to slow down a little bit in terms of the upward slope. It may do a little bit of a pullback to get things back in order, back into the baseline level. Look at this. 1 month ago, we were in fear. 1 year ago, remember where we were 1 year ago? That was in November. We were in extreme fear. Markets were selling off pretty significantly back down to 25 level. But again, it's gone from 1 month ago, from a 29 of fear. People started investing. We started moving it up. And you can look at the chart to the right and see what we're talking about here. We were in this fear area over here. Then it started getting up this level. And here we are now. This vertical move, this substantial vertical move, like we saw here. And then we saw that this level where it peaked out, getting into the extreme greed, and things turned around. We'll talk more about that in a second. The employment picture, better than expected. 128,000 added to the payroll, I believe it was. 3.6% unemployment rate. 128 may not sound good, but there was about 50,000 from the GM strikes that were actually taken off the rolls. Expectations were for 75,000 additions, so that's a lot better. Productivity came in. I think this is really interesting and very telling. With all the technology we have right now, productivity came in negative, the first time since 2015. At the same time, employment costs rose dramatically, much higher than anticipated. On a month-over-month basis, we saw about a 3.6% increase. So we have productivity going down. We have employment costs going up. How does that work? In other words, if you had a company and your productivity is down, but you're paying people more, obviously you're going to have a margin squeeze. I don't know where that's playing out right now because we're not seeing that necessarily in the earnings reports from companies. Is it going to be something in the future that may happen? Possibly. But right now, there is some very wonky economics, and a lot of people are looking at this, and people that really study economics and utilize their economic backdrop primarily for a forward look and a discernment of where should I put my money and invest are really scratching their head saying, I don't really know what's going on right now. New highs on the Dow Jones Industrial Average. New highs on the S&P 500. New highs on the NASDAQ. Ooh, it's a big party, except for the small caps. Small caps aren't participating. They're participating a bit on the upside, but nowhere near their all-time high. We have some overbought indicators. We have the RSI. We have the Bollinger Bands on a 50-day basis. Bollinger Bands out of the box. When you put them on your charts through TradeStation will be 20 days. Go to your input, change it to 50, see how it is. If we're seeing two standard deviations above the 50-day moving average, that usually is a sign of a severe overbought circumstance. If we're seeing a price that is below two standard deviations of the 50-day moving average, then we're seeing that there's an oversold situation. I'm going to show you that on the right here. Take a look at where we are right now. If you look at this right now, what we're having is a very clear level of over the top. And in fact, we've seen from time to time, ride near the top. And in fact, if we take this and go back even further, let me clear these off here. Very rarely do you see it get up to the top, although this was a very big slope right here, and stay there. Usually hits the top towards the peak and it comes down a bit. Hits the top, goes to the peak, comes down a bit. It may ride it. Let's kind of look at this. This is 2019, the beginning of the year. Let's go back. Give me a second to get this where we want it to be. All right, right there. You'll notice here that we have a hit on the top, and it sort of kind of starts rolling back down. Again, it doesn't mean you have to be in a massive correction here. Just things need to cool off a little bit. We do see it break down here. We know that was an extreme situation. And of course, that extreme situation, what happened? Well, extreme situation to the upside occurred. So this revalues itself on a regular basis. This is a 50-day moving average in the center here, this gray line that you're looking at in there. We're going to look at the McClellan, the KRI. Of course, one of the things that I think we have to recognize right now is MOMO is meeting FOMO. So we have the momentum trade that's going on, and it's been going on for some time. People are sitting on the sidelines, and then we get, oh my God, man, I'm going to miss out. So we got the FOMO, the fear of missing out. And that FOMO is creating a significant amount of excess money being put in the market, which I believe is that heightened move to the upside right now when we're talking about the Bollinger Bands and the fact the RSI, which I'm going to show you in a second. Next week, economics coming out, PPI, CPI. We got retail sales, import, exports, and inventories. Of course, anybody that does, in fact, sign up brand new for our indicators, you will get a free 4-hour online course that is available, which teach you all about trading basics and utilizing volume-based indicators, market profile, understanding the psychology of it, and exactly how to use it. So if you haven't done so, go over to the TradeStation Trading App Store, install at least the trial. Only paying members will get that 4-hour free course, but do yourself a favor. It's well worth it. We get really good comments on that. It's an evergreen, great discussion about investing. We're going to look at SPY, the Qs. Roku had a pretty bad day. We called this, I think, 2 weeks ago to watch for the short on this. It was down very significantly, dipped down below actually where we even thought it would go, below down to about 117 in the early morning time of the markets yesterday. Popped back up to about 128, settled in somewhere around the 120 range or 119 range at the close yesterday. Expedia, SPH, Sally's Beauty Aid is cranking. We have Disney also, so we have a few things to talk about. Let's go and talk about this, okay? We've talked about this before. This is the McClellan on the left-hand side, which is a basic momentum. It looks at the cumulative advanced decliners and a few other things that go into that. -7, I thought that was pretty interesting. And I thought that was interesting because we're seeing the top line of our numbers here, you know, going up, and this is diverging on the downside. So your advanced decliners, market breadth is thinning out very significantly. That's what this is showing us. There's no question about that. You know, we had some really good market breadth right about here. You know, you look at this area right inside here, and then it started to move lower as we saw markets move higher. That means that there's less and less stocks that are actually participating. Now, at the bottom here, we have 52-week new highs, and we're seeing that's 177. That's good numbers. But again, look at this. We saw that, you know, there was this breakdown into November from about, what's the level here? About 219 down to about 100. And now we're at 177. So once again, we have a market that is climbing higher, but you know what? We're not seeing participation broadly. There's only a few stocks that are actually helping out. On the right-hand side, we have the Spearman Indicator. Spearman Indicator basically shows us where we are in a trend. And when you start to see that roll from a top line above 90, there's some concerning times possibly coming. And oftentimes you get these baselines, which are back up the truck and buy. If you can see a McClellan that's -200 or 225, those oftentimes are very good times to buy. Now let's take this, let's see if I can do this, and drag this to where we are here. So it's not starting to roll over yet. The last time it really rolled over was kind of right about there. And you can see that there was a couple more days that it started moving. So it was above that 90-day and then started moving down. So right now we're not really rolling over on that, but we are on the top end of the Spearman Indicator. So I think that's something to really appreciate and to keep a hold of. Let's look at, what else do I want to look at here? The KRI. The KRI is currently a +2. We can see that it's meaning that the overall market is basically near equilibrium, although it got hot a couple times over the last few days. Once again, we're seeing that we see a driving market up, 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 but not getting too overly inflated from this particular gauge, although a +2 is an area of, I would say, higher than, of course, pure zero equilibrium. But we're not seeing that there is a significant amount of movement into this overheated zone. So it is an orderly move to the upside, at least from this indicator. So again, we look at a lot of different indicators to find confirmation of something. So right now we have, you know, a diverging indicator when it comes to the McClellan. We have a Spearman, which is the top end, and it hasn't started rolling yet, but it could roll at any time. We have a KRI that's a little bit overbought, but not too much. We have a Bollinger Band that is in the top side of the Bollinger Band, which is the highest point, 2 standard deviations above the 50-day moving average. That is an alert. That's something we need to be thinking about. So where are we going from there? Well, let's take a look. What I did right now, and we'll make this a little bit bigger, we'll focus on this daily chart today for educational purposes. You can use this on any chart, 30-minute, 15-minute, whatever you want. On the top, we have, of course, the famous radar screen that is for the autopilot, which shows you multiple time frames across a line for any particular symbol. So right here, we're looking at the ES. We got a short alert on the 30. The 60's got a long profit. It's out of trade on the 240. It's long on the daily for 13 bars. It's long on the weekly for 10 bars. So, okay, just giving you an idea, but let's really focus on this. And what we have on the bottom here, I'm going to really try to make this a bit bigger here. And give me a second. Let's look at the SPY. Okay? Let's look at the SPY. All right, you all with me? Everybody can hear me? By the way, if you want, you could put in the chat any stocks that you want me to look at. If we have time, we'll get to those. Please do so. A lot of times people are pretty shy about this. But what we're showing you here is a couple of things. Right now, we're seeing that the RSI on the S&P or the SPY, or actually, let's go right to the index, INX. It looks about the same, right? Looks about the same here. We're over the level. We have a good aileron momentum. It scooped up in the beginning of October, started moving up and around, still in good positive momentum territory, starting to roll down a little bit. You can see that momentum is starting to slow down. We have an RSI that's 68.89. Yesterday, I think it was right towards the middle of the day. it did pop over 70. The point here is that you'll hear all the time institutional investors utilizing RSI as a basic level of overbought or oversold. This is right out of the box. You can utilize this by just doing an add a study. And what you do is if you're in TradeStation 10, you go add study, click down, click the R, find the RSI, and you got the RSI ready to go. It's the RSI, not the relative strength. Use the RSI. And this is what it looks like right out of the box. You got a line that's drawn on 30. You got a line that's drawn on 70. 30 is considered oftentimes overbought, oversold. Above 70 is overbought. And when you're getting up to this level, there is a really big concern that we are in overbought territory. In fact, when you look at this time and time again, you start to see that, okay, we got a little overbought and there was a little bit of a drawdown there. Again, it doesn't mean it has to be a correction. It just has to mean the interim play of where we are. We got an overbought right about there, here, and we had a little bit of a drawdown on this level. You saw that there was oversold level right about here, and we started to see a little bit of a move, and then the move that confirmed with the upside. The thing that I'm looking at right now is this, over the 50-day Bollinger Band, the 2 standard deviations above the 50. You don't really see that often. Again, we went back here and we saw a few of these. Once it starts, it could ride on it for a while, and especially if you have an inclining and a steepening 50-day moving average, that's important, and you see that kind of moving. But really what I want to really focus in on here is that you have multiple indicators that are telling us the same thing. We're seeing that there is a little bit of a froth in markets right now. Again, that doesn't mean we have to have a total collapse or anything like that like we saw last year at this time. The conditions really aren't set necessarily as much for that. There is a lot more, I think, froth in the market and hope going on. So any disappointment can be concerning. But I think that right now we're looking at this and we kind of focus in on various charts. We see the Qs, again, over 67. Momentum's good, starting to dip down here. And we see that, you know, we have some support up here, but there's some air down to about the 193, which is an area that we mentioned before. We're going to focus in on a couple of different stocks here. Roku, for example, we talked about this and focused on this about 2 weeks ago. We said that, hey, earnings are going to be coming out. The stock has been really concerning. Currently, we really target this area, about the 141 area. If it dropped below, there was really nothing it could hold on to. It dropped as low yesterday to about right there, 116 or so. It has some downside probably, I would say, to about 110 is an area that I would look at. But Roku, obviously, after their earnings, a little bit of disappointment after this last go-around, has the opportunity to move lower. Now, you see that, of course, the change in the aileron. This is available in the TradeStation Trading App Store as well. The aileron is clearly changing. We're seeing just one bump to the negative right now. And you notice when we start seeing that negative flow, even though there is the moving averages still above the line, something just to be a bit aware of. If we get a confirmation these moving averages also move below the line, I think the momentum is shot for this stock. SBH, Sally's Beauty Aid, getting a big move yesterday. Look at that candle, though. Finished at the low of that candle. And some people can call that a hammer, or, you can use various candle numbers. Bottom line, closed in the lower third of the candle. That's a concern. Still, stock up very handsomely from where it was, or beautifully, Sally's Beauty Age, Beauty and Health and Holdings. 1678 was a clear level. I mean, what do you see here? We see how there was some consolidation in this range right here. This consolidation, we'll utilize our box tool, grab our little box tool, and we'll see the big consolidation right about here. Of course, we can see that. We extend it to the left. We see that kind of goes along with where we were to the left side in that consolidation. And then we saw it kind of move up. Not much here. Looking left, there's a lot of just, I would say there was a lot of messiness up here, but not a significant amount of overall concern. We saw the momentum was generally the upside. Then it finished up here. I mean, your baseline is that you probably can come down, I would say, in between this area here, 1865. If you want to be long this stock, 1865 is probably some support to play off of. Below 1750 is where problems come in. Expedia announced last night, or yesterday, stock also. This is really a classical view of something I want to show you. We're not going to look at, as a matter of fact, we're going to take off the Bollinger Bands right now. We're not going to look at that. What I want to, and I'm really not really focusing on this either right now. I was really doing that for major markets to show you. I want to focus on a very clear and identifiable pattern that you can see here. Look at this consolidation. This is massive consolidation inside of a range. And actually, I got to extend this down a little bit. Right about here. Yeah, I'm close. I'm close. My mouse is, there we go. Massive consolidation inside of a range. Either this was going to break up hard and kind of explode, that wrapped coil was getting pressure throughout this entire range. We had a horizontal movement through time from June through now that really was only from 125 to 140. Decent range, but not that tremendous. And then what was going to happen was we're going to have to find out when that coil released, where is this going to go? Well, it resolved to the downside very significantly. Where is the stock from here? Well, let's take a look. I don't see anything. I don't see anything. Yeah, this stock is in nowhere's land. It's kind of off of my chart. We ended up at the low from 2018. So not a good play right there. Not looking so good. This one's interesting. You know, we talked about this. We talked about a short on this one for some time. The price that we'd like to short, I left this on the chart, was 72.51. Currently trading at 70. So it's currently trading right about, what was the price? 70.38. Currently trading about right about there. I think that, you know, if it gets up to probably the 71.20s, we'll probably look to take a short of this stock again. Don't forget that the last time we did this, it rolled up right into that 72.51 area, came all the way down to about the 58 range after there was some concern about what their earnings are going to be. Earnings out, a lot of shorts are getting squeezed today. I would look for this as a counter trade and look for that. Let me just go real quickly at some of yours that you want to look at. DAL. Airline clearly is in a momentum move to the upside as far as aileron is concerned. There is some air here. Let's take a look, just use a quick bar and look at where we got right about, well, there you are. There's your resistance point, right? We're going to draw a line and we're going to connect lines. Very simple to do. All we want to do is connect multiple lines across from right to left. Always look left. That's our motto, right? Look left. We're going to look from the right to the left when it comes to our radar screen, from the longer term time frames to the shorter term time frames. Longer term time frames always trump the shorter term time frames. And we're going to look from right to left on a chart and draw lines together. And golly gosh, look at that. You know, what do we see? We see that there is a, if I could do this, twice, two different times, right here, hit and came underneath that support line that we drew out for you across multiple swings. So each of these altimeters that are formed are going to show us where there is building a significant amount of support or resistance. So where do we go from here? Well, the other thing I'll mention to you here is that when we look at this, and I think that we have to agree that, let's kind of put a line here, right from here to here is probably our support line. We probably have a little bit of interim support here. So we kind of draw two different lines. I would say you have support at about 56.5, then down to about 54.84. A lot of this is also determined on fuel costs, capacity of the airlines, flying, as well as what's going on with Boeing for many of these companies. Maybe not so much Delta for Boeing, but bottom line is that it is there's a lot of things that are going on here. If it can break out of this level, probably I would say it really has to get past right about here. I would call 59.5. Gets me at 59.5. It's got a good shot to start moving up higher, getting to the next level, creeping up into the next resistance, which is probably about 61.5. What do we got? PGE. I don't know if we can even do this one. I mean, we could PGE, enter. That's not the right one. There's no PGE. PGE, enter. I don't know. PCG, you mean? Do you mean that? PGE. Procter & Gamble, maybe? Hey, Woody, which stock do you want to do? We have 30 seconds left. By the way, thank you for joining me. Tell your friends. Make sure that you come each and every Friday. We're going to be here. We're going to be talking. We're going to be walking. Right now, we have the futures on the Dow Jones down. Well, there they come. Start moving up. We're down 17. The ES down 6, and the Qs down 19. The market is open. PCG. Well, let's see real quick. PCG. Enter. There we go. This stock is bankrupt. We know that, right? There's a Q there. It's bankrupt stock. It's bankrupt stock. So I can't give you advice on this one, or not even advice. We're not giving advice. This can go either way depending on what the California government does. So with that, we got to close it up for the day. I want to thank you for joining me, and make sure that you are with us next time as we talk about all of this and investments related to technical analysis. Make sure to go over to TriggerCharts.com. Check out all that we have to offer. Thanks a lot. Appreciate it.